Hi friends. So there are two types of investors in the market. One category, the category first is those people who want 1 to 2% of daily gain and then they risk their entire capital for just a small gain. There is another category of the people, of the investors who first find the great stocks and then starts investing in them at a right price and build a long-term wealth portfolio. So if you are in the second category, this video and this channel is especially useful for you because here I'll be sharing completely transparent, easy and useful research for you for building a long-term wealth portfolio. Now today we will be talking about IREDA, I-R-E-D-A, the company which is the biggest company in India's renewable sector financing. Let's decode its latest results and find out what is good in it and what is bad in it for an investor who want to build wealth for the long term. So if you are interested in building in long-term wealth, please completely watch this video. It will be a game changer. Let's begin Sagarnomics. So before we begin and start our analysis, I just request you to like the video because you generally forget after the end of the video. Second, if you are first time on this channel, please make sure that you subscribe this channel and click the bell icon so that my next video gets as quickly as to you in form of notification. Let's begin IREDA's analysis. So as you can see, any company which spends money on R&D or innovation is the one which survives for the longest period. You can take example of Apple. It can be Apple versus Kodak. You see Kodak is nowhere, Apple is top company. Now similarly, if you find so many power companies, some have disappeared, but over here what you see is on your screen is IREDA and IIT Bhubaneswar. They tied up for clean energy innovation. Now this company, first of all, let's understand what does it do. It is absolutely in renewable energy, right? And that consists of solar energy, wind energy, hydel energy and different type of energies which are coal free. Now this company is not an ordinary company. It keeps on doing R&D. I'll just give you one more example before we start the analysis properly. So here on your screen you see IREDA gets nod to set up a retail subsidiary for renewable energy business. Now what is that? This is a significant step and this is very recent by the company to get into that retail business, that is not B2B. So far it was financing B2B, that means it was financing discoms, electricity department, those electricity companies and so many others, but now it wants to join hands with government's mission. What will it do? It will handle the retail business under key government schemes such as PM Surya Ghar, rooftop solar and PM Kusum. The same scheme which PM Modi has announced on the inauguration of Ram Mandir, that we will be installing 1 crore rooftop solars in this term, that means 5 years or so. So that is the commitment of the government. IREDA suddenly sensed an opportunity and got into it. And now what does it say? That along with B2C segment in renewables energy and emerging sectors like electric vehicle, energy storage and green technologies. So a company which was doing a B2B business now getting into the B2C business. So it will be in the storage of the battery and different type of the innovative segments. Now let's look at the investor presentation, but before that I just want to give you an overview of the company, and you can simply see the company is in 229 rupees is the price, and if you understand value, price should come secondary. Okay, 61,000 crore rupees market cap, 42.5 price to earning ratio. Now most of the people are stuck in the price to earning ratio, and I am telling you it is one of the most misguiding factor, that never ever trust only the PE ratio. It can be manipulated, but if you combine it with the PEG ratio, PEG ratio, it will give you a better picture. So PEG ratio near 1 is good enough, so it is 1.25. so considering the market rally of this stock last year plus the recent correction, the company is still significantly undervalued. That doesn't mean that there is any kind of stock recommendation. Absolutely not. It is an educational video and you should consider it in that sense only. Now, 33% profit grown in last 5 years as per CAGR, but sales has grown 19%. That means every order that it takes, it increases its profitability, profit margins, and that makes the company a winner. If you look at the industry, there are biggies like IRFC, which is kind of a similar kind of a company. We'll talk about it. There is a detailed video on IRFC. You'll find it in the end screen elements. Second, PFC, Power Finance Corporation, then REC, which are kind of sisters, and then IREDA. So these are the companies. You look at IRFC, which is 1,99,000 crore market cap versus IREDA, which is 61,000 crore market cap. That is 1/3 of that size. But considering that, you just look at the important ratios, then you'll find that what I am going to talk about. Just give me a moment, please. So if you notice over here that when comparing it with PFC, IRFC, you will find that this company is having 9.30 as return on capital employed versus 5.73 by IRFC, because it is in a different kind of ball game together, right? If you look at the ROE, you will find that IRFC 14.56 versus IREDA is 16.20. So again, it is leading over here. Though PFC, REC are having better ROE, only point is that they are traditional power finance companies, and this company, IREDA, will take some time to get matured in this space. But that shows that its direction is good. As far as the rating is concerned, this company has got AAA rating, that is highest rating by all the big agencies. So over here you are seeing the rating, and that rating is AAA, acute AAA rating. And what is the rationale for rating? It says that this rating is just because its cost of funds is moderate and it manages its finances very well. And you can simply see that this company, so here you can see that its growth is phenomenal in this industry, because within 1 year, that means March 31, 24 to March 23 to 24, within 1 year, it has grown its loan portfolio from 47,000 crore to 59,000 crore. It's a significant jump in loan disbursements. So this is an amazing number, right? Now let's talk about the weakness and strengths of this company. So strength is very simple. It is sovereign ownership. So government of India is controlled by 75% government of India. That simply means government of India makes sure that this company survives. This is a very powerful cushion hand behind it. Next, it is having diversified borrowed portfolio. I'll just show you that over here. So as you can see over here, it gets 26% of its business from solar energy, 16% from wind energy, 11% from hydro energy, and 6% from manufacturing. And then there are other sectors from which it is getting its business. So it is very well diversified business portfolio. Now, not only that, geographically also, if you see, this company is having widespread presence. So 13.9%, yani 8,976 crores is the Rajasthan, is the loan amount of loan it is granted to Rajasthan government, especially those electricity companies, the discoms, so and others. So that is there. Second, the highest, second highest is Karnataka, 13.43, but this is actually third highest. The first highest is the Andhra Pradesh, where it has given 9,930 crore rupees loan, which is 15.4%, and rest you can simply see that it has its business across the country. As you can simply see that all the domestic credit agencies are giving it AAA rating. It is ICRA, it is India Research, Acute and Care ratings, all are giving it very good rating. Now, a company which is having a smart business sense always manages its risk and then optimizes or increases its profitability. So what is the risk in borrowing companies, especially NBFCs? Then you find that their borrowing profile makes a lot of difference. Now, because if the companies borrow from the international market, there is a risk which is called currency fluctuation risk, foreign currency risk, and that is where this picture comes in over here, and you will find how smartly this company has reduced its foreign borrowings from 26 this is 9986 crores to 8948 crores over the years. So 2023 to September 24, it is actually reducing its international borrowing and it is increasing its domestic borrowing because of stability of interest rate scenario and powerful RBI currency control. But you might be asking now that, sir, this is the data which you are showing all the rosy pictures, but the problem is that the company has corrected recently, its price has gone down. So there are two reasons. First is that it is a time correction, price correction, which is required, which is done. For last 1 year, it was running like a marathon, I should say not marathon, a sprint runner. Okay, but now you see it has started correction, which is actually very obvious. The first thing is that it was supposed to happen. Second thing is that you simply see company has posted its recent results, but over here you will find a small little moderation in the profitability and the overall scenario, especially in the net NPA scenario. So net non-performing assets actually have grown from 0.99% in the March quarter to 1.04% in the current quarter. So that is why the company has delivered the numbers. Market might have got a little disappointed, which is very obvious because market looks at a very short-term picture. Here are a few more developments for you, is that this company is widespread growing, actually very ambitious. You can simply see that this company has set up an wholly owned subsidiary, and that is in Gift City, Gujarat. Just for what? Which is called International Financial Service Center. Right over there, it has done that. So it has created one subsidiary over here. Second subsidiary it has created for retail business, as I shown you. Third thing is IIT Bhubaneswar. It has already in that pact. Now look at this. This is also a very important news over here, that company is raising funds of 24,200 crore rupees, and it is not borrowing just by one means. It is borrowing this money from issuance of bonds, short-term loans, commercial papers, domestic and international markets. So it is very well diversified borrowing profile. Now, more often than not, you might have considered a Sarkari company, a government company, to be slow moving. Just like if you go to a government bank and if you want to withdraw your money or do some transaction over there, it takes a lot of time. When you go to a private bank, you'll quickly do all your work and then you move on. So similarly, you might be thinking, Arey Baba, this is a IREDA, it's a Sarkari company, it must be slow. But I tell you, this is not slow, this is very hungry for growth. Look at here, that this company has got first of all-time high annual profit of 1252 crore. That is fine, but it sets a benchmark for fastest results in NBFC space, barring your private NBFCs as like Shriram Finance and others, and this company has delivered the fastest results. This is amazing. And not only that, they actually mention it in their presentation, and they are very proud of their fast working culture. So look at here, you can simply see that it is committed to implementing highest standards of corporate governance, prompt submission of business performance report on the last day of the first half of the financial year. So they are saying that we are not a simple company, we are not a Sarkari company kind of work culture. We are agile, we are fast, and we'll grow at double-X speed as compared to the industry. I mean, this is what I am saying in the last sentence. Please don't consider it as an official sentence. Okay, so now moving on to its technical analysis. So let's see. But before moving to technical analysis, I just want to give you a very important information. First information is that we have a very powerful membership program where I and my team share the research about the various kind of developments in the stock market, especially the special situations where you can find the value unlocking in future. So that is there. So you should try joining my membership. The link you will find in pinned comment as well as in the description. Second is that if you want to properly learn the stock market basics, not theory. I am again telling you, not theory, just practical, easy and most powerful skills, then I have a very good news for you. We have a stock selection masterclass which can change you as an investor forever. I'll just quickly introduce you the same. So this is our mission, that we want to make world's fastest way to find great stocks. Okay, and we are committed to that, I'll tell you, and I give you a guarantee that by using this technique you will find the great stocks in 10 minutes or less. Are you excited? Perfect. Now, so if you really want to grow your knowledge and in a very easy language and easy manner, so within 10 minutes you will find the great stocks. You can develop your portfolio in less than 30 minutes and save 1 hour every day of your time in researching the stocks. That's why I want to tell you. Second thing is that if you are prepared to take advantage of this bull market, you know, bull market for 10-20 years is already there. India's economy is fastest. If you want to take bull market advantage, if you want to create a powerful stock portfolio, if you want to build long-term wealth, and if you want to properly analyze the stocks, and if it is important for you, then you should try considering joining this masterclass. The link is given in the description and it is in the pinned comment. Right now, coming back to our point. So over here you can simply see So now let's talk about the technical analysis of IREDA, and you can simply see that there is a range bound movement of this company, and from where, you can simply see that this company's stock price has moved from one sec. So you can simply see that there is a complete range bound movement of this stock for approximately April, May to now. So it's May, June, July, August, for 4 months approximately it is moving in the range bound movement. But the good thing is that, as you can see, that its RSI is in a very good divergence. So it is a positive divergence. So the stock is going to rally if it breaks this particular level of around 250. So once it breaks 250 and moves for stays above it for around 4-5 sessions, you can see a bull run starting up. Second thing, how long this bull run will go? So it's you can simply see that bull run depends, the length of the bull run usually depends on the previous consolidation period. So if for 4-5 months it is consolidating, so next 4-5 months it should be going higher. Now similarly, you can see that the same picture over here, that the length of the consolidation period is equal to or almost equal to the growth period. So considering that, it should be for next 4-5 months there should be a good bull run in this stock, and it can go maybe around 350 or so, but there is absolutely no guarantee. But technical chart is saying that you have to wait for the breakout. If the breakout is bullish, then there is a chance that using this flag pattern it can go for a rather high price level. So that's a small and concise video. I just try to share my analysis with you. I hope you might have liked it. Please share your feedback in the comment section, and also please make sure that you subscribe to this channel and click the bell icon if you like such analysis in future, and if you want my video directly to be in your notification, please do that. Secondly, please share it. If you found a 1% value addition in your life using this video, make sure that please share it with maximum people on WhatsApp, Telegram, Instagram, Facebook, wherever it is possible. Your help will help me to be motivated to create more videos for you with deeper analysis. So with that, thank you so much for your time. I'll meet you in the next video. Jai Hind.